Research at Cholamandalam Securities, joining us on the show on the fundamentals. Dharmesh, hi, good afternoon and welcome to the show. Just taking a look at the weekly move, some of the indexes have seen, and it's the Nifty IT index that's lower by about 7.25% on just a week-to-date basis alone. Keeping this entire anthropic issue aside, and if you only focus on Indian IT, does this dip pose as a buying opportunity for any of the names? Would you now look at IT more positively?
Yeah, good afternoon. Thanks for having me for the show. To answer you very straight and flat, I won't be looking at most of the names in the IT space, particularly from the SaaS side, as a buying opportunity. The reason being, till now, for last 3-4 years, the IT companies has been struggling for growth, right? And we were just penciling it 3%, 4%, 5% kind of a growth. And if you take the currency depreciation, that's a tailwind for the Indian IT companies out of it, then you are hardly left with 1 or 2% kind of a growth for, some of them, and many of them will come under a negative territory. Now the next problem is, see, it will take time. I'm not saying it will happen in next 3 months, 6 months, or 9 month time frame, maybe a year or so. But post that, it will be a struggle for them to maintain the present revenue, whatever they are, sustainability will be a problem for them with Anthropic kind of a companies coming. See, it came 4 years back, 2021, and it's not only Indian IT companies, it has disrupted the entire globe. Even US IT companies were down big time. So a few more maybe there in the offing, we don't know as of now. But such kind of things all leads to, IT being services being cheaper, margins will, further deflate, and that will add to the profitability pressure. So at 5-7% at best, after currency, tailwind playing out, you are growing, and then again the value at 20-25 times. I don't think that's the case. Unlike US IT companies, which are growing in excess of 20%, the profitability count. So valuation multiples are justifiable out there. Select companies which are product-led IT companies, one can still look at it. But from services point of view, I think trading bounces here and there, 1 day or 2 day can be there. But largely, there would be a meaningful structure in any of them.
Okay. Uh, Also joining us this afternoon, Rajesh Palvia. He is the head technical and derivative research at Axis Securities. Rajesh, always great having you. Now we've seen two very good days of trade on Tuesday and Wednesday. Thursday, Friday have been softer, and I'm not sure if this becomes important in terms of a metric. While the index is not showing a major move, but just the breadth looks extremely negative. What's your take, and can we at all bounce back from this negative cycle we've again slipped into for the last couple of days?
Good afternoon, Harsh. Good afternoon, everyone. So index consolidation is likely to happen, as we have already seen a very strong pullback post Trump tariff announcement, and I think Nifty is likely to remain in the range itself. On the downside, 25,550, and on the higher side, 25,800. This could be the possible range for next couple of trading sessions we could see for the Nifty. But stock specific action is clearly showing sign of confidence, and sentiment has turned on the bullish side for the market. So till Nifty is trading about 25,500, I think one should remain on the positive side of the trade. And on the breakout, about 25,800 could lead to some short covering action, and then possibly Nifty may scale up to the next level of 26,000 also. But on the bank Nifty front, here we could see some outperformance compared to Nifty. On the higher side, 60,300 is the key supply zone. Once we able to take out, I think here we could see a good rally to unfold towards 61,000 level also on the coming week. On the downside, 59,600 needs to keep as a stop loss. But stock specific action is clearly showing a sign of confidence. So we believe that, till Nifty is not able to give breakout, I think one can focus on stock specific opportunity in the market.
Stock specific is the way to go. We're going to have to slip into a very short break. On the other side of the break, we'll understand what some of these stocks are that have made it to Rajesh's radar. But as we do that, bringing the budget discussion on ground, ET Now is hosting the India Investment Summit in Mumbai today. Thought leaders, visionaries, policymakers investors, MSMEs and innovators will unravel the union budget of 2026, analyze its impact and chart the country's economic direction for the year ahead. The summit puts the spotlight on India's BFSI sector at a pivotal moment between tariffs, currency valuations, union budget implications and forthcoming financial year. Tune into ET Now India Investment Summit today. Back with closing trades, and we're looking at some pockets of the market that are doing seemingly well for themselves, even though we've been largely flat ever since the get-go. And one such group of stocks is the cigarette stocks. It's names like ITC, VST Industries, Godfrey Phillips that are all doing very well today. And the reason behind this is a brokerage note that's coming from the House of Nuvama that says that the worst for the cigarette stocks is over. Price hikes by the cigarette companies may not see a double-digit decline next year. In fact, the price hikes that they have, they are supposed to undertake to try and mitigate a little bit of this excise duty impact that some of the cigarette stocks are seeing post the 40% GST. Over and above that, there's an additional excise that has been announced that came into play on 1st February, wherein we saw a lot of stocks on the second crash. But yes, Nuvama believes that these companies have started to undertake price hikes, and multiple more rounds of these price hikes could be well in the offing, and that's the only way to battle out this entire excise duty. On the flip side, they also believe that this excise duty that's imposed by the government is not going to be reversed or is not going to be reduced anytime soon. So that withdrawal is not happening. And they're also saying that after this, because the taxes have been hiked so much on cigarettes, they're not expecting further increase in any sort of tax on cigarettes for the next 2 years. That at least gives a medium to long-term visibility on the positive side for some of these stocks. And given concerns in other defensive sectors like IT due to the AI disruption, investors are looking at other defensives where there is high comfort of valuation, and cigarette stocks, they believe, are in the heavily sold zone. And on the back of that, the valuations have corrected significantly to relook at some of these names. So VST Industries is up 4.25%. Also want to see what ITC is doing, about a similar gain, 4.5%, and VST Industries, the other cigarette stock that's in focus. So yes, these are the bunch of stocks that are doing well. Dharmesh, talk to us about the kind of momentum that we've seen in these cigarette stocks lately. 2nd Feb, the first market day after this excise duty came into effect, we saw a little bit of a pullback on all of these stocks, but they seem to have seen partial recovery from there. What's the outlook here? Do you believe the worst is over for these cigarette names?
The price has already been taken by cigarette companies. That is what we have learned. Godfrey Phillips has come out with new packets with new price out there, and I think 25 to 40% is the different price hikes which they have taken across their brands, and ITC has also done the same. So I have personally not seen it yet, but this is what has come to know, and because of that, we are seeing a strong movement in the cigarette prices today. How much it mitigates the excise duty hike, that calculation has yet to be seen. But going by the hikes which we have learned, I think it more or less covers the entire excise duty hike. Having said that, excise duty, I mean, the last 20 years I have been tracking it, and any excise duty hike, volumes have actually gone north and it has never come down. So volumes growth will continue to be there, and it's like STT. Even if you impose, the people who are trading, they will trade, and we have not seen any dip in the volumes, although it's effective from 1st of April. When STT came, from that day till now, the volumes have gone up substantially. So it will continue to be there. The only fact that next 2 years there won't be any excise duty hike, I don't know why that. The reason being, it's a very good revenue churner for the government, and we are still at 53% on the total duty front, whereas the world average or the health organizations recommend 75% kind of excise, I mean, taxes on the cigarette. So there's plenty of elbow room still out there. With that in regard, if you look at, say, ITC is one company which I track closely. So last 10 years, 12 years, it has grown at 8-9% of a PAT CAGR, with still available at around 20-21 times of a PE multiple. So a trade can still be there from current levels. I mean, 5-10% upside can still be there. But beyond that, I find a company which has been unable to deliver more than 10% kind of a profit growth to find higher valuation multiples.
Dharmesh, if I can get a maybe 20-second answer, do you believe that there is enough valuation comfort now in some of these names? Have these turned a value buy, and is that why we're seeing the kind of run-up that we're seeing?
It's a trading buy, Harsh, not a value buy. So trade, yes.
Okay,
Well, yeah.
okay. Point taken. Rajesh, on charts, how do these look?
So ITC is in oversold trajectory. Some pullback action has been taken place, and looking at the price behavior, stock managed to give breakout of its falling trend line on ITC. 320 is the important level now. If it's able to sustain above this level for next couple of days, I think then some more buying action towards 340 we could see in this counter. Godfrey Phillips, again, stock is in downtrend, but some recovery is taking place and sign of reversal is there. Stock able to take out its 20-day moving average supply zone. Looking at the structure for Godfrey Phillips, I think if it's able to hold about 2140 level for next couple of days, then possible extension of really towards 2250, even 2350 we could see. So those who are already on the long side of trade can trail now, stop loss towards 21 40 50 zone and hold the position for next target of 2300, 2350.
Okay, we need to step into a very short break. Just before we do that, I want to mark two or three of the recent earnings candidates that we've seen in the last 2-3 minutes. BEML came about 10 minutes or so ago. That stock is seeing a very sharp decline. The loss has come in at 22.5 crore compared to a profit of 24 crores this time last year. So BEML seeing an 8% fall on that stock right now. Shilpa Medicare, seemingly good set of numbers. Those numbers are on the bottom of your screen. There's been margin expansion, so looking good over there. And we also have some other numbers that have come, like Heidelberg Cement, looking like a good set of numbers over there too. We'll be getting a better understanding on the charts and fundamentally about some of these, but just on the other side of this very short break.